In this video, we'll explore the take profit rule, which, as you might expect, lets you set a take profit for one or more trades. Let's start by configuring the rule input data fields. The Trade IDs field references the trades that we want to set a take profit for. Trade IDs are a list of one or more unique identifiers for trades and are output by rules such as place trades, trade collector, or filter trades. The trades could have been placed at any time either individually, in a group, or filtered from another list. A take profit can be set on a trade when it is a pending order or an open position. However, a trade can only have a single take profit configured, so executing a take profit rule for a trade that already has a take profit set will replace the existing take profit. Now let's look at the different types of take profit that are available. First, we have target price. This specifies an absolute price level. When the market reaches this level, the trade is closed. This value can be entered manually or passed in from other rules to set a dynamic take profit price. Next, you can define your take profit in terms of pips. This approach sets the stop a fixed number of pips from the trade's entry price. The number of pips is a positive number for a take profit that will close the position in profit, or a negative number if the position is closed in a loss. If you prefer to manage risk in monetary terms, the amount option lets you specify exactly how much profit you are targeting in either the strategy default currency or the symbol quote currency. The number of pips and take profit price will be calculated to match that target profit amount, taking into account your trade quantity. Again, the amount will be a negative amount if the take profit will close the position at a loss, and a positive amount if the position is closed in profit. The next option is distance pips. Instead of anchoring the take profit to your entry price, this option sets the take profit a fixed number of pips away from the current market price. For example, if a buy trade is currently 10 pips in profit, placing a take profit at 10 pips distance from the current bid price will target 20 pips in total profit. Note that the distance pips is always a positive number, as the distance is always calculated relative to the current spot price and does not indicate whether the take profit would close the position in profit or loss. Similarly, the distance amount option works in the same way, but instead of pips, you can define the stop distance in monetary units. So, if a trade is $30 in profit, setting a take profit distance amount of $70 relative to the current spot price targets $100 of profit. Lastly, there is the break even for each position option. This sets a take profit to the entry price of the trade. It's a great way to exit a trade if the price is not moving and the downside risk is increasing. If a position is losing, it stays open and can recover to break even. If a trade is winning when the take profit break even is set, then the trade will close immediately. After setting a take profit, you can enable the chasing flag. This configuration allows the take profit to move dynamically with the market price, maintaining a maximum fixed distance from the current spot price as the price moves against a position. This is the same behavior as a trailing stop loss, but in the opposite direction. Using this feature, if the initial profit target is not reached, you can dynamically target a smaller profit to exit a trade rather than relying on a stop loss and exiting at a potential loss. Sometimes, you may want to keep your take profit orders hidden from the broker or exchange. That's where the silent option comes in. When activated, take profit orders are not sent to your broker, but are instead managed by Arconomy and only executed when a tick price condition is met. The final configuration option is scale out. This mechanism can be used when multiple trades are being used to manage an aggregate position for the strategy. The scale out calculator can set a different take profit for each trade in the list passed to the take profit rule. First, we can sort the list of trades passed into the take profit rule by comparing either the created time or the target price of each trade. The target price also refers to the entry price for positions, so if the trade list is a mix of pending orders and open positions, then the target price of the orders would be compared to the entry price of the positions. We can configure whether the sort should be ascending or descending to sort the trade list in the order required. Next, we select the calculator type to use to determine how the take profit price will be calculated for each trade in order relative to the previous trade. The take profit for the first trade will be set by the normal rule configuration above. The scale out calculator is then used to calculate the take profit for each subsequent trade in the ordered list. The basic arithmetic operations are available for dynamically recalculating the next take profit. For example, the saponino. Decrement operation will subtract the number of pips entered in the adjust by field from the number of take profit pips that were set for the previous trade in the list. The adjust after field determines the number of trades in the sorted list between each recalculation of a take profit. The minimum field allows a minimum take profit pips to be set that will override the calculated take profit if the number of pips is less than the minimum. As an illustration, we have configured the take profit rule to set the take profit for the first trade in the sorted list to be 500 pips. The scale-out configuration sorts the list of trades by target price in the ascending direction, so lowest entry price to highest. The calculator type is set to decrement, and we will adjust the take profit set by 25 pips after every 3 trades in the list. The take profit target prices for 10 sample trades for gold against the US dollar that have been passed to the take profit rule would be calculated as follows. The scale-out calculator enables a strategy to set tiered take profit orders, and is especially useful when used in a strategy together with the place trades rule scaling into a position.